Once again, it's the Royal Financial Investment Group, and as always, this is Prince Dykes here, coming to you guys with another great video. Was asked by a question, well, not asked by a question, but ask a question about can I make a video on the CPI and the SPI? And what did I say? Of course I could. So that's why we're here today. But before we jump into it, don't forget about my first book coming out next month. That's being published by the Royal Financial Investment Group. Wesley Learns to Invest. Great children's book that parents will love. Definitely check that out next month and stay tuned to support that. So let's jump straight into the topic because I don't have a lot of time and I definitely know you guys don't have a lot of time. So, and on top of that, don't forget to like, subscribe, comment, share, and all the other good stuff. So CPI, right here, what I have pulled up is CPI. I'm going to click right here on the symbol and we're going to type in CPI, right? Enter. So a lot of people may say, okay, you got the symbol up. What does CPI mean? It's the IQ CPI Inflation Hedge ETF. A hedge ETF. So we all know what inflation is. The price of everything, it kind of goes up 3 to 4% or whatever, right? So what this is more of this ETF will make money if inflation didn't happen and we actually had something called deflation. This goes against inflation. So if inflation goes up, this position will lose and lose and lose. But if inflation starts to go down, then this will start to gain. That's how this one works. So a CPI. And you want to say, well, how does it invest? How does it do it? You got this wonder handy dandy thing called portfolio. You click on it, right? And once you click on it, you're going to be able to see the top 10 places that it's holding its earnings. Well, not earnings, but how it's investing. You got a REIT ETF in here. You got the speed of Barclays, all the good stuff you can check out. And you can click on itself and to see what it's investing in. And what is this doing is that it's just showing you where the money is going. You can see where it's at. Regional exposure is in North America. You can see where, give you a little detail if you want to know what's the breakdown of it. Right? If you got more questions than me explaining to you something on this, definitely just ask me the question below. But this is what you can see how it's being invested. But that's what the CPI for. It is going against inflation. So as inflation goes up, this will lose. If inflation goes down, this will win. Simple concept, right? So let's go to SPY. SPY. This is the stock symbol for the, let it pull up here, S&P 500 Trust. S&P 500, we know that it's treated as the benchmark of finances. All financial advisors or financial fiduciaries or brokers or whatever who's managing money, the benchmark, which meaning that they try to beat the S&P 500. Everybody tries to beat the S&P 500 because if you can't beat the S&P 500, you might as well get the SPY and just let it sit there. So all the financial advisors, they use the S&P 500 as a benchmark. And the S&P 500 is a benchmark for the United States, one of the major ones, because you always hear about the Dow Jones, you always hear about the NASDAQ, and you always hear about the S&P 500. The reason why you hear about those is when an outsider or anybody, they want to see how the U.S. markets are doing, they look at the S&P 500. S&P stands for Standard & Poor, and it's going, it has 500 companies in it. So I have another video that breaks that down and tell you what's in it and all the good stuff like that. So that's what it does. It tracks the S&P 500. So the S&P 500 is doing good. What would this fund do? It will go up. If the S&P 500 does bad, what would this fund do? It would lose value. So, but also the cool part about it is that it has a yield. It has a 1.8%, 1.88% yield that it's paying right now, which is nice. So you get to keep your money in a S&P 500. You're tracking the S&P 500. And over time, you're tracking the S&P 500, and over time, while you're just holding it, you can be making money as well off of the yield. So let's see if we can see. I want to pull up something here. So the S&P 500, let's pull it back. And you say, well, Prince, I don't know about just letting my money ride on the S&P 500. Let's go all the way back to, this one's taking you back to 1993. Over a decade and something ago. 12 years, right? Just look at the numbers. So you can see here where it started, and it had its dips around about 2000. I wonder why did it have that dip? What happened? .com bomb, remember? Bust, boom. Here, coming right here in 2008, it had another decline. Everything declined in 2008, remember? But guess what? It bounced back up. So yes, it has its peaks and its valleys, but overall, it has gone up. Look at the numbers. So I don't want to get too detailed with it. Don't forget to like, subscribe, comment, and share. Hope this video helped. Give me a thumbs up, thumbs down. Share it with your friends, your uncles, cousins, brothers, all of the good stuff. And if you got any questions or anything, leave me a comment below, and I definitely answer your questions. All right? Until the next video, be safe.